Right, so China's sheer size and runaway growth have led many investors to see almost limitless potential there, but others, such as Tim Cockerill of Ashcourt, Rowan Asset Management, are wary of getting carried away. He likens China's bullishness to the boundless optimism that surrounded Japan's economy 20 years ago, and look what happened there. Well, I'm pleased to say Tim Cockerill joins me in the studio now. So you are much more cautious on China. Why?
Yes, I think you have to be careful of getting carried away. I mean, I made the analogy with Japan because in the late 80s, what you had was a situation where it seemed Japan could do no wrong. Everything was becoming Japanese. The way to do business was Japanese. And at the minute, you have a situation where China is the focus of everyone's attention, and it seems that China can do no wrong. But actually, when you drill down into it, you can see a whole number of issues which potentially are going to cause difficulties in the future.
Which are the most important pressing issue or challenge facing China's economy right now?
In the short term, inflation is a concern. I think what gets forgotten in inflation is a personal thing. You know, if you're very wealthy, food price inflation doesn't matter. But if you're actually on a low income, food price inflation obviously takes up a lot of your income. And it's been a concern of the Chinese authorities for some time.
I mean, do you think that seeing what's happening in the Middle East right now, concern about Middle East-inspired uprising violence might encourage them to, might induce the kind of reform that will adjust the distribution of wealth in China?
I think they're very concerned about what's going on in the Middle East. They've been, as you'll be aware, suppressing coverage of that sort of thing. Will it change things fundamentally in the short term? No. I think it's a huge economy they've got to try and turn around, but certainly what you've seen over the last 10, 20 years is the difference in income between the very rich and the poor widen, and they're looking to increase, and have been increasing the minimum wage. In Beijing province, by the end of last year, they had upped wages, the minimum wage, by about 60%.
The budget for this year shows, what, a 35% increase in spending on low-income housing. So they are making, as you say, that they're increasing subsidies, increasing the minimum wage. They are making some efforts to address the widening gap between rich and poor. Do these measures go far enough?
I think it's a start. I think you had these measures in the 11th plan as well, but they made progress, but they've got a lot more progress to make. And the demographics are another issue, because by their own admission, come 2015, the number of people who are not in the working population is going to outweigh those in the working population. So they need to really rebalance this economy. And
but they've said they want to do that, right? They've said that they want to move from an export model to a more consumer-driven model. And
that would be last time.
They said that last time too. So it's not happening fast enough. What does all this mean for investors? I
think it is important, but the investing community will focus on where the growth is and where they can make money. Certainly, domestic consumption has come to the fore. It's become much more topical. But I think if you take a step back and you look at the scale of China and you look at it from an investment perspective, you have to say you need really to be invested in China to some extent, because it is now the second largest economy in the world. So
its sheer size, its sheer clout as a political player, economic player, means that, well, despite these problems, you almost can't afford not to be invested in China right now, from what you're saying.
Yeah, and they've got, I mean, in the new plan, and again it was in the old plan, an emphasis on the environment. I mean, they've got a huge environmental problem.
Yeah.
You know, one of my favourite statistics is that China's got 20% of the world's population and only 7% of the world's fresh water. Now, for drinking and washing, probably not too much of a problem, but industrial processes take a huge amount of water, and they have to control that. And in this new plan, they're looking at reducing water consumption at the industrial level by 30%.
Well, you know, Tim Cockerill, thanks so much. I'd love to get into those issues with you. Do come in again. Great to talk to you.